Maybe if you could just clarify what we just brought and reported here about you guys perhaps pulling back from China. What does that mean in particular? Is it just you're retreating from your sales activity, or is it something to do with your production plans that you had in place before?
Yeah, I'd like to articulate what I said, which means we are not pulling back. We are still here in China. The issue is how we can increase our investment. That's why I said on hold, which means we have to see what will be happening about the truce, which was agreed upon between President Xi Jinping and President Trump. So it doesn't mean negative. We have to observe what will be happening. And short term, probably more or less negative, but the long term, definitely that's long, which means we like to be here. We love to be here. So don't misunderstand. So we want to see what will be happening.
Is there anything specific that you're waiting for? And it's understandable, it's understandable that a CEO like yourself, many others that we've spoken with have been holding back on CapEx plans. And to your point, they haven't canceled those CapEx plans. How does that apply to Suntory? Is there anything specific from a trade deal that affects the way you approach your CapEx plans in China?
Well, as a matter of fact, the capital expenditures for the short term planned itself is not huge in China. Instead, we are putting more resources, such as human resources, to observe and find opportunities in China. And 2-3 years from now, we have a plan to invest more, such as factories, production lines. So from the beginning, we are more or less, not too aggressive. But again, 2-3 years from now, we'll be thinking, we'll be maybe taking action to invest to our factories in China. So in a short term or mid-term, we are not so positive to invest, such as build a new factory, for example. And we want to leverage, such as cross-border e-commerce and like a new device, so that we can touch consumers in China. So that means we are here. We are committed to China.
Takeshi, what are you seeing in terms of demand, consumer demand here in China for Jim Beam? Is it being reduced? Is that demand weakening because of the U.S. association or the brand association with the U.S.? What are you seeing?
I don't see any symptom against drinking Jim Beam yet, but I'm afraid. However, I think a consumer space, global brands are well accepted already. So we can't push Chinese consumers do not buy American products and like that. So I think consumers in China are very much sophisticated now, and it's been more and more sophisticated in terms of accepting global brands. So I believe in consumption in China.
I just want to stay with the trade story. Of course, some of your bourbon products also face tariffs from the EU in retaliation for some of the US tariffs. What are you seeing in terms of the impact there? How is that playing out for the business?
Well, that affects our bottom line. And we can't take price so easily in Europe under the economic condition, which is not, bright toward the future. So the consumption momentum in Europe is pretty low. So it's a huge headache for us. And we don't know what will happen between US and Europe.
Mr. Niinami, we've been showing our viewers a breakdown, essentially, of your revenue broken down by geography. And correct me if we're wrong here, but you still get about 60% of your top line from Japan. Where do you see that share going in the next 5 years? In other words, what I'm trying to see is, in 5 years' time, will Japan make up do you see Japan making up a minority of your top line sales? And if you do see that happening, what market do you see taking Japan's place?
Absolutely. We have the Asia-focused strategy, including India. I don't see huge upsurge of sales in Asia, but we will be penetrating in Asian market, including India, Southeast Asia, and China, and Korea, Taiwan. So the positioning of Japan will be slipping down over time. And by 2030, our plan is from Japan, the number of 60 will go down to the 40. So, and plus, we want to penetrate into United States much further more, including Mexico.
Takeshi, I know you're also an advisor to the Prime Minister Shinzo Abe, and I guess we have to ask you about this whole issue with the sales tax hike that's slated to happen this year. Given the fallout that we've seen with U.S. and China on trade, can the government pull this off?
Well, first of all, I think because of the consumption tax hike, that will a bit affect the consumption in Japan, but there will be a lot of policies to support kind of weak consumption, and the government will spend a lot of support to consumers. That's one thing, and I think we have to understand the good relationship between Japan and China. I believe the relation with China is one of the best times in recent history. That was created by Prime Minister Abe. So that's why I mentioned about e-commerce, cross-border e-commerce from Japan to China. That works very well in the space of consumption. Consumers. So I think not only Japanese market, in total, Asian market will help us to grow our business. Our business means the Japanese business. So I guess I assume that the current situation of the good relationships with the Asian countries will support our economy. And that is because of the Prime Minister's leadership.
Mr. Niinami, one of the big stories, particularly in Hong Kong,
is our SIP.
Mr. Niinami, I just wanted to ask you about the AB InBev plans to raise potentially up to $10 billion with a Hong Kong listing. They're going to end up with quite a cash pile there to invest potentially in this region. How does that affect your investment plans? Does that change your strategy at all? How do you see that impacting your business?
I don't think it will change any of our strategic plan because our target is a premiumization. So we want to stay with the premium lines of our products. Suntory means premium. That is the brand image, corporate image, which we want to instill into the Asian market. And that's our turf and our strength.
Yeah, Mr. Niinami, final question there on this AB InBev IPO. And you mentioned, of course, that there won't be an impact. For the first time, everyone will get to see the books of those Asian assets. Is there anything specific you're curious to see about that competitor of yours now that it will become public record?
Say again the question, please. As for the other competitors, I think we have to leverage much more about trade pacts. That should be more addressed because our SEP, CPTPP, those things are quite effective from now on. And I hope our SEP will be realized in the near future, including India. So as a Japanese company, to be global, focusing on Asia, we want to leverage the trade pacts to be competitive against our global competitors.